Welcome to Quick Take TA here on Landy's Crypto Corner. Today is June 11th, 2024, and we're going to look at Bitcoin today, and we're going to keep this pretty short, just like yesterday's video, but we are going to follow up with kind of what we were looking for in yesterday's analysis, and that was, Bitcoin was beginning to break down into the $68,000 region, and on further downside we were looking for it to kind of run this low side consolidation structure prior to putting in the second high here, creating a double top around $72,000. Well, we did get that move, and Bitcoin did run down. It ran down to around $68,000. Now the criteria for looking for immediate continuation from the daily would be any closes below the lower second, and and then any kind of closes that lost this wick low area here at 65,850. Now, the lower second was at 66.8. It did not close below there yesterday, and now the criteria is going to be this: if Bitcoin closes below the lower second and loses this current wick low at $66,000, it can try to save itself at 65,850, but it's more than likely, even intraday, to head down to where the lower third is, possibly even into the April of 2021 monthly swing high at $65,000. That would be if it loses the lower second standard deviation, which is now, instead of being at 66,800 like yesterday, has moved down because Bitcoin closed below the basis and lower first here. Well, now it would be any closes in the medium-term timeframes below the daily, like a 4 and 6 hour, below around 66,500. That loses yesterday's wick low at $66,000. Very quickly going to find ourselves at that last swing low there before putting in the high side structure here in consolidation there at that 65,850. Any price action below there, I'm looking to roughly where the lower third is to the April of 2021 monthly swing high at $65,000. Now you can see that part of this is part of what's holding price up is this lower high from this downtrending move, that started back in April and began to shift and get a trend break coming into middle of May there, May 15th. Now, if Bitcoin does lose this high, the next high to be looking for would be, or the next support area would be the April of 2021 monthly swing at 65 to the next lower high here at $64,000. Any price action below there, we could potentially see Bitcoin running this higher low structure that started this uptrending move that, kicked off that higher low to trend break higher high no matter what, because it closed above this 65.5 region. Now, if Bitcoin does lose 64K, we're likely looking at Bitcoin headed down to that October of 2021 monthly closing area right around this prior higher low structure that kicked off the uptrend, which is coming in at, a range between 61,350 down to the wick low there at around 60,000 to 60,150, depending on your exchange on the wick. That's not, necessarily the first thing I'm looking for. We would have to see $65,000 and $64,000 as a zone breakdown on a daily close while getting and maintaining expansion to the downside. Now, if Bitcoin bulls can push back above the lower first standard deviation on the daily here, which is coming in at around 67.7, then I would look for, a little bit more, possibly up to 68, somewhere around this low here, 68,300. If they can grab onto that being the bulls, and push price up, I would look for it to head towards the basis band, which is now at the prior cycle high at $69,000. Anywhere above there, I would target the upper first to upper second as a zone of interest. This is right where the spike high failure is, or swing high failure is on those lower term time frames, at around 70,000 to 70,200 or so. Up to the upper second standard deviation, which is cutting across this lower high close at $71,000 to 71,200, depending on your exchange. Above there, I would look for 72 to get ran, and then probably head for the all-time high. But I want to point out a few different things here. Excuse me. Stoke is still pointed down on any closures below. This is a regular Stoke, not a Stoke RSI. So this is measuring close over close price momentum, not the velocity of RSI. We are going to look at RSI in just a moment. But any kind of daily closure back above 69,630 would turn momentum back to the upside right around the bearish control zone. And that would have to happen in today's price action. So and something important that I'm going to call out here is happening today as well. For today's candle, it's still Tuesday for me, but it's the Wednesday candle for Bitcoin. It's living in the future. And the other thing, we'll go here. We'll take a look at RSIs. We do have a bearish divergence playing out right now. And the easy part of this move has already occurred. So that being that basically confirm this high and then move down to the lower second of the bands. The second part of that move on that bearish divergence drive would be to close below the lower second and get expansion down into the support here at 65 to that lower high before the trend shift at around $64,000. That would be the next big move to look for if this was going to get continuation. I did want to call out where the bearish control zone currently is. It is now coming in at around 64,400. So, having a zone down there for like the next leg being between 65 and 64 is fair game. And that would bring it right to the edge of the bearish control zone. And possibly provide for setups on the other side for bullish divergence, as there isn't really much locally to be had at the moment. The area that you'd want to see bullish divergence come from is would have been local here. I guess it could still come locally. No, it's out of the question now. That close was slightly lower than the closes over here. So the next big area to look for regular bullish divergence, if it's going to form on this particular structure now, would be either regaining this structure up here that it's currently testing the downside of, or getting a bullish divergence drive from around 60,800 on the close, with that wick coming in on that higher low down there that kicked off the trend change at around 60,150. So a move down to 64 to 65,000 dollars would do that. Would at least provide for the opportunity if Bitcoin puts in a low to get a regular drive of bullish divergence on the daily. Now, I do want to call out that on RSI, you're going to see the 2-day is also playing out its drive of bullish divergence. The 3-day as well is prepping in the next closure to possibly solidify. This would be 2 drives in one of bullish divergence, which is pretty powerful, believe it or not. And in general, I would be targeting somewhere around the baseline or midline here. Scale midline for RSI is at 65,200, so that's right here. Next leg, of course, would be somewhere between the bearish control zone and that area there, and we can always refine based off of the prior low structures on RSI once that occurs. But we don't have a 3-day closure for another 2 days, so we'll come back to that. I do want to call out that 3-day is pointed down on momentum for Stochastic momentum. 681 is the momentum pivot. 2-day is also pointed down with a little bit of a bearish momentum divergence here as well for the 2-day, because this was a higher high in the 2-day as well. So, we're looking at 69,500 as the pivot there. 2-day is closing with today's daily candle, so keep an eye on that. Now, I've mentioned this before in the longer form video last week, but the 2-day just didn't look ready for expansion. It was already expanded Bollinger Bands. You want to see compression. So preferably, you want to see where the 2-day lower first is, which is at $64,000, to this April of 2021 monthly swing high at around 65. Hold up, as it is above the prior low. Even the lower second is above the prior low here. They kicked off the trend change. It is threatening in this 2-day candle to possibly take out its higher low structure over here. So we would be in more of a consolidation look to start. If it did take out this low structure here at 66,500 on a close, of course, that would give us the bias that not only would it get below the basis band, but that would give us the bias that it'd be testing around 65 to that $64,000 by the lower first, and likely going into a bit of a consolidation or compression phase in terms of volatility. The 3-day is something that I also pointed out prior, and that is that it's set up in a big range right now. So basis band is down here at 65,600. You know, as long as it's above the basis band, it's technically in the strong half of the bands on a closing basis. It can wick through, no problem. Even hitting 64, which is this area over here, not necessarily a high, but a swing high at 65.5, with the close opens coming in here at $64,000. So as long as it's above the basis and that area, I wouldn't be looking for that lower first. But if it does start to break down from there, then we're looking somewhere around 62 to that 61,350 I was calling out, and then possibly this higher low swing from that 3-day structure. But we're going to come back and analyze this a little bit more tomorrow, because there is the FOMC meeting and rate decision stuff and a lot of economic data coming out tomorrow. And something that that I will post in some of the various servers is a look at the Fed meetings and post Fed meeting, how price reacted. And you may find that interesting, as usually there's a rundown into the Fed meeting, at least this year, and then a nice reversal after the Fed meeting. So we'll see if that remains true. It actually does kind of depend on what they do here. If they do, if they do the unexpected, which is, possibly drop rates, because the expected is that rates will remain the same. But if they did the unexpected and dropped rates, well, that would be a surprise to the market. You're likely to see a lot of readjustment and realignment market-wide. I don't think it would be anything too long-lasting, but might start carrying some of our projections for expansion on the longer-term timeframes out to the end of the month and not the middle of the month. So let's leave you with one last thing here, and that's looking at the 12-hour. The 12-hour did kick off expansion to the downside, but it swung down. We did not get closes below the range lows. So the criteria would be you got to get expansion plus break the local range. At minimum the last, we already broke this low wick here. So it would be the next, highest low wick, and that is, 66,584. It did not close below it. It closed above it. And realistically, it does have room down to 66, 66.3, and even to get full-on expansion. It's got so much support here that, it could get expansion down into support and continue walking the bands down into 65 to 64,000 over here, which is this high. So, I wouldn't be looking for like a stupidly aggressive move to the downside. I think this is, just a little bit of repositioning coming into, the middle of the month and planning for the back half of the month. So in this case, as long as it's above the lower second, we're not looking at that more aggressive expansive posture to the downside, but we would see the lower second start marking down below the range lows. So keep in mind that on the 12-hour, this close open structure is what is holding those range lows up around that 66, 250 to 300, and that wick low there is that 65,850. Now, I apologize. I'm usually a lot faster, and of course I don't always sound like that, like this for those that are new. But I did want to call this out because this is what you want to watch for coming into like daily closes, stuff like that. On 12-hour timeframes, they can give you a lot of data and a lot of they can help shape your bias in terms of directionality and possible lows being put in on the daily by looking at the 12-hour. So 12-hour Stoke right here is at 68,771. So it's a little far away, but we are going to see the next 12-hour candle get its close into the new open prior to the New York session open. And that's important because that means that it's the second 12-hour candle in this daily candle that will be during the FOMC meeting. So I would suggest that you keep an eye on the Stoke pivot here. It's currently at 68,771, likely to come down pretty aggressively because that was all around the topside consolidation. So it's kind of reading that topside consolidation and it's playing catch up. We're likely going to see it, getting pretty close, somewhere around the 68,000, maybe even 67.5, 67,800 area within the next 12-hour closure. As long as Bitcoin is going sideways and holding this range, I would say, you want to see it holding at minimum around 66,500 to that 66,300 area. So that's where I would pay very close attention to the next closure. If you need an indicator that has a momentum pivot number for Stoke, you can pick up the BA reverse Stoke panel. This is a free indicator. And you can just search reverse Stoke and look for the one that's by Trader Holly. So you can go reverse Stoke. And it's by Trader. I'm saying this wrong, so I'm sorry to this person if they are, unfortunately, listening to me right now. But it's reverse Stoke BA Pig Gift on panel, and you want the on panel, not the on chart. The on chart just sticks it over your price action, but this will give you that pivot. So I do suggest picking that up and keeping an eye on it. Now, one last thing to follow up on is a few of the things that I posted in the Extra Ordinals server there. And that is going to be this here. And that is, get rid of this guy here and go to the zones of interest. And this is lower term time frame zones of interest. And I just wanted to call this out because it's pretty important to understand how this works. So I had drawn this before price action started to push up, but basically you've got these red zones. These are breakdown zones as it relates to volume and where price had found resistance and then continuation after, we have up here, we have the original breakdown, right, into a higher volume area. Price puts in another higher volume set of candles here, wick to close to wick rather. It bounces up and rejects the higher volume candle above. Gets continuation after closing below this wick low. Then we have a little bit of an area of interest. This was right around one of the daily levels at 67,300. You do want to see that area holding, for bias for price to test further up. If it doesn't hold, then it's going to come back down. And we saw this area at that 67, 300 area on the daily time frames started starting to break down. Bitcoin tried to put some volume in, and after retesting it twice, came down, found some volume, and then nuked through that volume to the actual low, the current low of this move. So all you do is you reverse your way back up. So if Bitcoin recovers this red zone, then we can start looking to this yellow line. So that was the green arrow to that. If it can close above here and hold it, then it has the potential to head to the next red zone. But it has to hold this line here at 67,300 or so. In this case, it's 67,243. And, as long as it's closing below it, that gives us the bias that things are probably going to head down locally, 67,000 to this red box down here between 66.5 and 66.766. If it can recover above here, then we can start, takes out these local highs at around 67,600. Then we can start looking to the next red zone up here at 67,869 to 68,135. Above there, then we can look up to 68, 450 to 68,700, and then so on and so forth. So I did want to call that out. That's what that chart is depicting. Just know that it doesn't mean the green arrows don't mean like get above it and it's automatically going to go to the next level. It has to hold that level as support to then try to work its way to the next level. If it starts to break back down, then you look back to the downside support areas in order. That's how you do conditional based price analysis. All right, I'm going to leave that there. This ended up being longer than I wanted it to be at around 20 minutes, but you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. With all of that being said, Landy out.